So I downloaded this Excel file from my broker showing my portfolio of approximately 50 corporate bonds. They are of various maturities and coupon rates. And I want to use ChatGPT and Excel to analyze the individual securities and the portfolio as a whole. So this is what I'd like to specifically accomplish with this exercise. I want to create a bar graph to visualize when each bond matures and the amount of the security face value when it matures. I also want to get I want to show which bond, which company the issuer is maturing on this graph. So sort of like a representation of the bond ladder. I want to calculate for each bond the yield to maturity, duration, and convexity, which are standard, parameters used to describe each security. Um, then I'd like to calculate the duration and convexity on the entire portfolio, and that would use a market value weighted average. Then I want to test the portfolio value against changes to prevailing interest rates. We'll show the results with tables and charts. So that's what I'd like to accomplish. Let's get started. So I'm going to create a new tab in the enclosed spreadsheet and or the var token, because if you look at each bond, you see this either you have this coupon token or the fix. It's actually fixed FXD. So I'll do FXD token. Whoops. The header row is row 11. Let's see what it does. And let's see what that looks like. Sure, it's not going to be exactly what we want, but it's a start. Okay, created the. Oh, look at that. It's not terrible. But it didn't parse out. We can see that it didn't parse out the name, the issuer name. It just took the entire field. And yeah, we need to also distinguish the year in which they're going to mature. So, all right, so let's go back. So in the bond ladder chart tab. You need add helper columns representing the maturity year of each bond, of each bond. Also, you didn't extract the issuer name from column A using the text string CPN and FXD as marking the end of the name. Issuer name. Let's see if that works. All set. I fixed the issuer parsing. Now it stops at the first and added a maturity year helper column on the bond ladder. Okay, let's see. Want the chart grouped or color coded by year? I can add that too. Yes, we do want it. Yes, I want the chart color coded. Regenerate the spreadsheet. Save as, just so I have a record. Let's see, we've got the original version. We skipped version 2. Here's version 3. Okay, open file. Okay. So this is version 3. We can close this. And now let's go to the chart. Okay. So let's see how this looks. General Motors Financial. Why are they so color coded like this? Color coded by year. Oh, because because the original data is this is in alphabetical order. We don't want it this way. We want it by maturity year. Okay. Let's fix that. So I wonder if I should resubmit the data or just instead of having it in alphabetical order. Let's see if I tell it to do that. Let's say reorder or or regroup, is it resort the data in so we can sort this. It's asking me if we want to sort the x-axis by maturity date, and we do want it to do that. We could do it manually, but we might as well let the chatbot do it. So I will say yes. Sort the x-axis by maturity date. Sorted. Okay. Is now ordered by maturity date, earliest to the latest. I kept the maturity year helper column and added a hidden maturity date. The sort deterministic. The chart remains color coded. Okay, let's take a look. We'll save that as the fourth version. Okay, and then we'll open the file. Okay, so here is the first page. That hasn't changed, the first tab. Now we go to the bond ladder tab, and it looks like it has been sorted. Okay. So we have no bonds remaining to be matured that will mature this year. It looks like there will be 3 in 2026 and 1, 2, 3, 4, 5, 6, 7, 8, 9 in 2027, 2028, 2029. And here you see our bond ladder and the face value or quantity as they do, and convexity of each bond, and then the portfolio as a whole. I'd like to just verify how we're going to do how ChatGPT is going to do the calculations using one example. This is one of the bonds in the portfolio, the Dollar Tree 4.2% coupon bond due May 15th, 2028. Chat GP. First, I'm going to explain the Macaulay duration versus modified duration. This is the formula for the Macaulay duration, and it's the weighted average sum of the uh, present values for each coupon period divided by the price, and then divided by this M is the number of coupons per period. So that's in order to get a number in terms of years rather than coupon periods. So in any event, this is the Macaulay duration is the amount of time in years it would take to get paid back fully, including the coupons. And then the modified duration is obviously related to um, Macaulay duration, but it's actually, if you look at a plot, which we're going to show um, on a graph of the price and the yield and the change, the price due to at any given time based on the yield, um, it's actually the slope of the line. So that's the form of duration we're going to use. We're going to actually use this to calculate the duration when we examine when market interest rates change. How will that affect the portfolio? Um, so um, Excel uses this formula here for the Macaulay duration, and this formula here it calls M duration for the modified Macaulay duration. And then you can see when we applied, you know, uh, this formula for the price of the bond, we applied this formula for the Macaulay duration. We we did, you know, we calculated these factors for each coupon period. You can see there are 6 coupon periods from the time of the settlement date to maturity. And then we summed up these different factors to arrive at the Macaulay duration, the modified duration, and the convexity, which you see here in these cells. And they agree with the um, the Excel calculated values. So, so in the interest of time, I have a document over here which contains the instructions that I'm going to give to ChatGPT. What I'm going to do is instruct it to add new columns in the holdings tab of the spreadsheet. That those are in columns AD, AE, and AF for yield to maturity, modified duration, and convexity. And I'm going to use the yield function, the M duration function of Excel, and our own numerical formula for each bond. And I'm telling it that the header row is row 11, and I want to format the cells AD11, AE11, AF11, which are going to be the headers for the additional columns, using the attributes of the column to the left of those. So it'll look the same. Okay, so that's just for formatting. Then I'm telling it to use these Excel formulas, and I'm explicitly spelling it out uh, for the model, and I'm defining the columns in these spreadsheets here. And then finally, I'm telling it what the last data row is. So, and defining that row 65 is the excess cash balance in the account. Um, okay, so let's copy this in and see what happens. I don't know, I don't have the paste option here, so I'll just do Control C. And then let's see what happens here. So if I go back, okay, I've added the 3 new columns to the holdings tab and filled in the formulas down to row 64. These are the formulas. For yield to maturity, modified duration, convexity. Um, okay, so let's look at the file. So I downloaded the spreadsheet, this one, this one that it gave me, and I've accessed it on up in on OneDrive, and so this is it. It did add the 3 columns. You can see this is the original data. This is the holdings tab. If I scroll over to the end, you can see that the headers have been, um, it's the same formatting as column AC in terms of the header. And then, so the final sort of sanity check could be with the Dollar Tree bond. There we go. So the row 27 is where the Dollar Tree bond is. It's 4.35%. 2 point, let's see, let's make these 4 digits. I think that's the same as we want to decrease the decimal to 4 digits. And then do the same for the convexity. Oops. Okay, and then compare this. Oh, I forgot to do it for the whole thing. All right, anyway, so if we go to the calculation, let's make this a little bigger. We have 4.35 for Dollar Tree, right? This is the Dollar Tree. 4.35 modified is 2.4325. $2.4325 and 7.4653, 7.4653. And so I'm pretty convinced that it did this correctly. So I'm going to start a new chat within this project bond portfolio, and I'm going to paste in instructions and we can review them. So I told it I've uploaded the spreadsheet you generated containing the added columns in the holdings tab. Those were the columns for year to maturity, duration, and convexity for each bond. Um, add So I wanted to add a new tab. Let's make this bigger. I wanted to add a new tab, bonds, called bond sensitivity, to that spreadsheet and calculate the duration contribution and convexity contribution weighted by the market value, which is column I in the spreadsheet, of each bond holding Use these weights to arrive at a portfolio duration and convexity. Then create a chart showing the portfolio value sensitivity to a 1 basis point change in the 5-year treasury yield. I guess I could say yield over 100 basis point plus or minus range from the current value. All right, so let's see what it does. Working with spreadsheet and creating bond chart. I'm reviewing the uploaded spreadsheet. To add the bond sensitivity tab, okay. Here's what I did. Okay. Did some thinking and let's see, here's what I did. Holdings tab. Oh no. All right, it didn't need to add these because they're already there. So it didn't need to do this heading. Total portfolio market value, sum holdings, portfolio modified duration, sum of duration contributions, contribution table. Okay. Sensitivity curve, portfolio value versus 5-year shift, 5-year yield shift. Below is the table created. Okay, so created the chart and an accompanying table. Let's take a look. So this is the output from our last set of instructions. And immediately you can see that there are a couple of things wrong. First of all, the calculation for the portfolio duration and convexity, there's something wrong with the formula. And when we can see also that it looks like we have problems with the cell formula for these last two rows. Now, these rows are not shouldn't be calculated in the duration and convexity calculation. They shouldn't be. These two rows shouldn't be included because you have cash in the bank and the totals. So moving back up here, you can see also that the market total doesn't correspond to the amount, the market value at the total here, which is 280, approximately 280,000. So we've got a couple of things wrong, and it looks like you can see here that we have the graph now where we didn't before. Um, okay. So let's make these. I'm just going to make these 4 digits. Okay. So this looks like more reasonable numbers. And then this is the table behind the chart. So let's look into this. So now that we've fixed this table with the weights and we've calculated the portfolio duration and convexity, let's try to understand the table um, of the change in interest rates, how that affects the portfolio value. This is the table. And so this is really this formula is the that you see here is this here, where you're looking at a percentage change in the portfolio value, um, compared to the total market value. Um, and you see this formula corresponds, which is any one of these rows corresponds to this formula, which is an approximation of the first and second derivative of change in portfolio value with respect to the yield. So you have the first order effect of the duration, and you have the second order effect, or how the curve is going to, how the portfolio versus interest rate is going to curve. That's the second order effect, uh, given a change in yield or interest rates. So we can see really um, here are the portfolio values for given changes, um, and here is here's the chart, and you can see it's basically a straight line. So really, the convexity has a minimal effect on this portfolio. Um, I guess it's based on the fact that in this table, when you're calculating the change, if you look here, this is the duration, and that number, I don't know if you can see that, but it says 0.014, and then you know the second derivative, or the convexity, the number is point 0.0000. So it's like at least two significant digits smaller. So each one of the so that really the convexity doesn't have much an effect. So you get essentially a straight line in the chart here. So that's it. This is the chart that we really wanted to create using ChatGPT and Excel. And I hope you found this interesting and useful.